Market is so undecisive. You look at the stock and it's down 5%, and a few minutes later you look at the stock and it's up 1%. I also read a report on CNBC that traders, not the investors, but the traders are confused about when to time the bottom. They don't know if this is the bottom or can we see markets go down even more. So in this video, we'll look at some technicals and some chart to see where we could be headed in the coming days. And let me know in the comments if you think we'll see more pain, and also let me know what do you think S&P, or where do you think S&P will stop at? Is it going to 4,000 or to 3,800 or lower? Again, we are not trying to time the market. No. We are just trying to make an educated guess, because if we are timing the market, we would be placing our bets along with our guesses. Okay, so here are a few details. So I'm going to share my screen and show you two charts that basically suggest that we could be headed a lot lower for S&P, almost 10% more lower. So on your screen is an S&P chart. The February 23rd, which is 2 days ago, closed below 4280 for the S&P. And that could indicate another 10% decline in the index is underway. Now the S&P is forming what traders or people, those who are techies in chart, will say a head and shoulders. And we can see that, of course, many things combines: Russia, Ukraine, rising interest rates, slowing growth, or extended inflation, or anything else you can think of. This is the reason to blame for it. So the first shoulder emerged in fourth quarter. If you see over here, I'm going to enlarge the screen here. So around September, October, we saw the first shoulder that emerged over here. And then we saw the head forming because of the rally, or the year-end rally that we had with S&P 500. And then the second shoulder is now emerging over here. So if you see over here, this is what you call head and shoulders, forming a head over here and shoulders over here. So the combination of the pattern implies that we could see about 10% downside to about 3780 right here for S&P. So we are still not done. In my opinion, we could see more pain in the coming days. Of course, remember, we still have the Fed meeting that's looming, and then Russia and Ukraine, there is a new news every minute. President Biden and European members held so many sanctions on Russia, but I said in my previous video as well that Russia is not going to deter from these sanctions. They have already placed these sanctions in mind. And look, US and Europe did not even impose the most harsh sanctions on Russia, because they know that Russia is not going to stop. Russia is not going to back down over these sanctions, because they know that Russia already priced in all these sanctions before going into the war, because nobody is going to sit back and say, you know what, Russia, go ahead and do what you need to do. No, we are going to be imposing sanctions. We are going to be imposing many more harsh sanctions on Russia, and I'm pretty sure that they are prepared. I was reading in news where they were talking about how US and Europe are going to cut the semiconductor supply to Russia, and I'm sure they kind of, stocked up on those things, because they know that a lot more sanctions will be coming their way. So we had some wild swings in the market after President spoke to the nation regarding the sanctions on Russia, and this was the second time where the market reacted that way. And I could see this drama of market uncertainty continue. And don't forget, everyone, we still have something called our Feds, who will be meeting once again to decide what to do with interest rate and inflation. So now I'm going to show you another chart on your screen, and this is the chart where I'm zooming out a little bit more, and you would see over here all the different corrections that we had in S&P 500, and you will see a common theme over here. So we had about 16% correction back in 2018 end when the S&P crashed. I'm only going back 2018. And then in 2020, we had about 35% correction for the COVID news that hit. And then now, and we expect about 20-25% correction with this Russia, Ukraine, and Fed that's going on as per the charts. So this, anytime, if you notice, we had that correction at the bottom, we have come out stronger every time. And I expect the same this time as well. This is not going to be the end of the world. This is not going to be where the stock market is going to zero. This is going to be a time when a lot of people will make a lot of money, and some of us will, of course, lose a lot of money as well. Some of the companies that we invested in thinking that 2023 will be the year for them, or 2024 will be the year for them, that's not going to happen now. The timeline has increased. So if you are holding pure and simple stock, my friend, you have to work a little bit longer and keep holding those stock, because at the end, those stocks is going to come out of wherever they are and is going to give us the return that we expect, but not in the timeline that we expected. So right now, currently, I see that all three major indices right here, All three major indices are flat to negative, while markets in Europe and Asia are trading a bit higher. 10-year yields have come out and cooled off a little bit, and oil have come down under $100 a barrel to about 95. But these conditions change so quickly that it's hard to predict where the market will end. VIX also jumped to 38.39 as the market opened yesterday and closed around 30. That's insane move. You could have bought a put on VIX yesterday morning and cashed out yesterday evening. I mean, this is crazy. And I can see this drama to continue as we get into the Fed meeting, and we can't say for sure where Russia and Ukraine will be by March 15th. But one thing is for sure, that we will have at least one less thing to worry about after the Fed meeting, because then we know that we only have to focus on Russia and Ukraine. Hope you like the updates, and let me know in the comments below what are your thoughts about S&P and where do you think we are headed. Click on the like button if I provided some value, and consider subscribing. And until next time, you all have a sparkling day.